Pension funds managers say they'll oppose any move to force investment in state-owned enterprises. The ANC announced in its 2019 Election Manifesto that it will investigate ways of using portions of pension funds for socially productive investments. But fund managers warn that the move could erode the value of pension funds. Canon Asset Chief Investments Officer Adrian Saville joins us now to discuss this. Good evening, Adrian. Thanks very much for your time. Is this inherently a bad idea? I want you to answer that before we can get to, some of the problems facing these state-owned enterprises. But inherently, is this necessarily a bad idea?
There are so many facets to this question. If you take this as a simple investment question, an investment question or an investment task has really two aspects to it. You have to find a viable asset, and you want to buy that asset at a good price. Now, as things stand, operationally and financially, I think it's a hard case to make that Eskom is a viable asset. Eskom balance sheet is under deep strain. I think that's well known through capital markets. Operationally, the business has been growing headcount, taking in more assets, yet output has remained essentially the same for the past decade. So you've got a business that's struggling financially and it's battling operationally. That doesn't make it a bad investment in and of itself, because if you buy that asset at the right price and you put in effective management and sort out the balance sheet, you could actually be sitting on an incredible investment. So from an investment perspective, I wouldn't put a line through Eskom. We have to dig into how do we fix the balance sheet, how do we sort out operations, and then from there we can establish the right price to acquire the asset.
Eskom may perhaps not be the best examples, but are we saying that there are no jewels among these state-owned enterprises at all?
Not at all. I think that if you look at the broad portfolio of state-owned enterprises, there's some exceptionally well-run assets. Probably one of the flagships is the Development Bank of Southern Africa. In the same breath, there are some assets that are really battling. Some people have gone so far as to question whether you can actually justify the existence of the assets. South African Airways is a case in point. So I don't think you can suggest by any measure that because it's a state-owned enterprise, it's battling or it's not a viable asset. You really are looking at a very wide range of assets that stretch from deeply troubled to globally impressive.
Well, if that is the case, then isn't what I said in the intro a bit of a knee-jerk reaction? Then shouldn't asset managers, instead of saying we will oppose this, shouldn't they be saying we'll look at what makes sense from an investment point of view?
Look, I think I can't speak for the industry, but I suspect what is in that, your word is a great one, your term is a great one, a knee-jerk, in that sort of immediate response to this, we will oppose this, is perhaps the reference to the prescription of assets, where you're being told as an investment manager, this is how you should allocate your assets. South Africa has I think a rather hairy history with prescribed assets because it was in the 1980s.
And isn't it also a fact, though, as well, Adrian, that as we have seen in the Steinhoff case, for example, these managers can actually be wrong or can be manipulated at times?
There is absolutely no suggestion that the investment industry has perfected investing, that we've got some ability to see the future to a greater or more refined extent than anyone else. So the fact that the investment industry, I guess, opposes this as a umbrella statement or as a broad-based statement, I think that also, just like the portfolio of state-owned assets, needs to be disaggregated and assessed carefully in its own right. I would venture that the same thing needs to be done with this opposition to the prescription of assets and the industry's position on that.
We have over the years seen and heard organizations like COSATU saying there has been an investment strike in this country for decades, and perhaps we need an intervention like this one to actually get the private sector in particular to reinvest in our economy.
Look, I think prescribing assets, telling people that they have to invest some portion of their pension in a certain way is one issue. I would argue that there is a far more obvious way to unlock a vault of investment and cash that's available to the South African economy, and that is by putting in place policy certainty, squaring off issues that have got investors anxious. Expropriation without compensation is an obvious case in point. But if you could, if the ruling party can turn their manifesto, which is an admirable manifesto, into a robust set of stable policy statements, I think that would be substantially more effective than a requirement that assets are allocated from pension funds. It will unlock a large cash asset that is sitting on corporate South Africa's balance sheet.
But then if you look at what has been happening in both mining and the issue of expropriation without compensation, those are most recent developments. But going back to my previous question, what people like COSATU have been arguing is that the investment strike has been going on for decades. So uncertainty really, and at times, the price of labor have been excuses that business uses to not invest really, or for their inability to do the right things.
I'm not sure exactly of the COSATU reference, so rather than debate that reference, perhaps we could just look at the experience over the last 20 years. And from the late 1990s into the noughties decade, the South African economy, I don't think, was on an investment strike. There were periods where the South African economy got up to investment rates of 30% or more of GDP. That's a pretty robust pace of investment, and that was admittedly at the peak of the commodities boom. So it was externally promoted rather than internally fed. And then global financial crisis and the 10 years of the Zuma administration, I think, has steadily put paid to that investment boom. And we now sit in a period where you've effectively got the South African economy investing replacement capital. It's unsurprising then that you're getting economic growth rates of 0% and 1%, because we've got an economy that's just replacing depleted capital. Regardless of COSATU's specific reference to data, I would argue there can be no doubt that we have to unlock that investment appetite, boost capital allocation, and move South Africa from a figure of 17% of GDP investment up to 30% or more of GDP. It's a substantial ask. One of the requirements is policy certainty, and without doubt, a second requirement is a confident private sector that comes to the party.
Okay, Adrian, thank you very much for your time this evening. Adrian Savo, who is Canon Asset Chief Investments Officer, coming through to us from Cape Town.